Yeah, so we are on T minus 3 minutes until we've got puppies going crazy around here. They're really cute, so we'll probably get some footage of them either laying around the home office or bumbling around or just running up against their legs, but they're really cute. So I'm here with Laura today. We are going to talk a little bit about the current interest rate environment, which, as our lender puts it, is not pretty right now. There still are some pros to the situation if you're the right buyer, or if you're doing it for certain reasons. But it is also affecting part of the market in ways that you would expect and that you're hearing in the mainstream. And I'm here today with Laura to talk a little bit about that from the seller perspective, what they're finding, especially if you've priced to and you've stayed on the market for a little longer than you probably wanted. That interest rate environment has kind of come in like a cloud into the market. And so, yeah, let's talk a little bit about that.
Thanks, Stephen. Yes, I do have one specific case where the interest rates have particularly affected my business. I have a listing where it's a short-term rental, which is very, very appealing in Bend. They're rare, but it's attracting investor clients. And investors have pulled out of this market in the high interest rate environment because typically investors want to leverage their cash or leverage their money as much as they can and not put all their cash into a deal. So in the case of a short-term rental, the cash flow just doesn't pencil. They're spending too much on the mortgage rates compared to the rent that they're bringing in. Now, rents are also a little bit higher right now, but not enough to offset that higher interest rate and their mortgage payments. So overall, in the market nationwide, we're seeing investors pull out, but now we're looking for a buyer who's cash or who's just looking to make a big lifestyle move, live in downtown Bend, and enjoy it for themselves.
So can you tell me a little bit more? I'm not totally understanding this whole cash flow situation, because if you're buying for, if you're buying an investment property, my thinking is you're interested in like the cap rate, right, of what that property is going to get you.
Yes.
How is the interest rate, purchasing the home, say you have enough down, like why is it still a problem? I don't get that.
Because your cost of carrying the loan is too high compared to your cash inflow. So in order to make this work, my sellers would have to keep dropping the price to increase the cash flow, and they're just not willing to do that. When they bought the home, it was a very good investment. They're getting wonderful cash flow because they bought it with a low interest rate. So they're operating on a positive cash flow every single month. And at the time when we have a high interest rate and their payments are higher, they're going to have to own this home a lot longer in order to service that loan. So I think that that's also what we're looking at is what is your ROI? Is your home is a place to live. It can also be an investment. Ideally, it's good for both, but it all depends on how long you're going to live there. And for the investor, how long you intend to own this, where the appreciation of the home can offset that lower cash return year on year. Does that make sense?
So yeah, it sounds like this applies to, hold on, let's find out here. Does this apply only to like the loan, like a loan finance? Oh, we got a guest coming in. We have some of our team members are here. So
Until next time.
Until next time. Talk to you later. Bye.
Bye.